So we're getting through there. I didn't realize we were going on quite long. I expected this to go long, but yeah, I really want to get through everything in one shot. Order flow sequencing. Order flow sequencing. Where is my chart? So you can see areas in here, right? Like this. Okay, 1, 2, 11, 14, 22. And there's going to be bullish version of sequencing right here, 10, 16, 45, 61, 69, right? Bearish, bullish, right? And in the settings, go to indicator. Give it a second to come up. Order flow sequencing right here. All right, you could set the cluster size. How many? 5. You could set to 3. 5 is strong. 3 is, again, depending on the market you're trading. If you're using a 4-range chart, you might want to set it to 3, but 5 is quite strong. I use 5 for pretty much all markets, unless I'm looking at a 4-range chart in the bonds or 10 years, I'll change it to 3. And it's going to be bullish, it's going to be cyan, and bearish is going to be magenta. And really what it's doing, right? Markets have to work to get through levels. So for example, if call it 125, 250, 375, 420, take this out up here, and let's call it 38, 50, 50, 720, right? This is the offer, right? The offer size that it trades. So, markets has to work to get through an area, right? And what that means is, as the market is moving up, okay, it's got to get through these areas, right? It's got to get through the 125, then more at the next level, more at the next level, more at the next level, even more at the next level. The market works its way through those, these offers, right? Then that's bullish, right? Because it took effort by the market on the market's part to get through these levels. Obviously, this is crude, so it's a bit weaker, but that's the idea. Just as the opposite would be on the way down, right? It's got to work through levels, right? Say, if it was going down, if this was 120, then 220, then 375, and 550, and 825, right? If it's market is selling off and it's getting through bigger and bigger levels, that's what sequencing is. Okay, and again, depending on the markets that you're trading, what is this bond 5-minute chart? I don't know if there was any in bonds on 5-minute chart here, right? You got the high of the day. Well, not the high is right up here. You're within 2 ticks of the high, and sellers are realizing, what, we can't take it any higher. They start selling it, right? It's got to eat through these strong levels on the way down, right? It goes from 241 to 441, 783, 985, 1,000, right? It had to work to get through those levels, okay? In the E-minis, here, bearish, right? Bearish, bearish. Then it turns around, it's got to eat through these levels, bullish, bullish, as the market starts going up. There's a little back and forth here, but as we're going up, more bullish one, and this is a big level, big area, right? Obviously, it's right around 3,800, but, at 38,050 all the way up to 2.25, it's almost a 2-point sequencing in there. So it's, it's quite strong, right? So that's what order flow sequencing is, right? But you got to use it with your own analysis as well, not just by, oh, there's bullish sequencing, I can get long. I mean, you could, but it is best served in context of the market. Anything is best served in context of the market. Now, ratios. Okay, now inside the handout section, there's a section there. There's a download you can download on order flow ratios, and it's based on order flow in the bar, right? And I'll probably be sending this out to you on email for all you guys that are attending. And what it is it's going to show you price defense or price rejection. Okay. And every bar, every green bar or red bar is going to have a ratio, okay? And bars that are doji candles, open and close at the same level, like this one here, have no ratio above or below. Now there's 2 colors. There's a black color like this, 7.125, and there's blue, 37.5. Now the blue is actionable. The black ones are just the normal order flow trading, just the normal trading in the markets that you are expecting. Now, you could adjust the levels okay, you just go in the settings, go to order flows ratios, and where are you here? You can see, so price exhaustion, ratio bounds high. Default I have set to 30, ratio bounds low, I have set to 0.69. Now, this will be 30 and above for ratio bounds high, so 30 could be 3,000, doesn't matter, it's a ratio. So as long as it's above 30, that's all I care about. Now, ratio bounds low indicates price defense. Now, it's set to 0.69, but it's 0.69 to 0. It's not going to be negative ever. The lowest it could go is 0, okay? And when it's price defense or ratio bounds low, it's telling you there's supportive buying. There's somebody theoretically defending a price level. They don't want the market to come down through that level, right? Now, price exhaustion, obviously, is going to be a high number, right? And so how I use it, how I've always used it when I first started noticing this in the markets is two ways. One, I'm looking when we get up to a swing high, right? Like up here, okay? I'm looking for a bearish, I'm looking for a red bar, but I'm looking for the number on top of the bar, okay? That's what I'm looking for. I'm not looking for a black number, I'm looking for a blue number because it's telling me either price defense or price exhaustion. So imagine you just had to move up, now I'm seeing exhaustion. Okay, I could position myself for a move down, right? You got a bit of a move down here. Now, let's find a bullish one for you. You know, here, right? Again, well, this is a bearish one. This is price defense, right? We came all the way up here. See the 718, right? You see this volume up here, 718, 415, 407, obviously the 362, the 402. So there's very good volume up here near the top, right? So I know there's price defense. What happened? You know, the market sold off quick 5-10 points, okay? But that's price ratio bounds low, okay? Now this is a ratio bounds low here, but again, it's not really the low, so I'm not really looking at that as defense. You know, ideally, I'd want to find something, you know, at a swing low. This is the low of the day here. Let me just find another market real quick. Okay, well, this is price exhaustion here, right? So we sold off, came down here. It's a swing low, right? I got the bullish ratio. This is a ratio bounds low, 78, because it's above 30. But really, I'm not necessarily diving into what the ratio number is. I'm just looking for, is it blue or is it black? Okay. And then I go from there. So I know that this is bullish here, right? And you see I got a nice little move up. Okay. Now, I also like using these in conjunction with divergences. You know, when I got a delta divergence, then, you know, I find those divergences to be especially strong. You know, here's stopping volume, right? Ratio bounds low, right? The low of the day, seeing some heavy volume. I mean, look at this bar. It's traded 774. The volume that's coming in here is 327, 155. Almost half the volume, over half the volume, traded right here at the low. So it's telling me there's support in the market, right? And then the market goes up to where? An area where I've got ratio bounds low, right? The blue number, it's above 30. That's how I know it's a ratio bounds low. And the market sells back to where? To the low of the day and actually goes lower, right? Now, you know, that's how you want to be using it. Now let's see, crude oil. I'll show you something again, you know, right up here, right, testing the high of the day. You know, we're one tick off the high. You get a ratio bounds low there, 40, 45, right? Now, I said I like to use it with ratio and divergence. Here's your divergence, here's your ratio. In this case, you know, the market just, you know, it moved down a little bit, went sideways. But I often find in some markets, especially Bunds, you know, Bunds is a great market to trade with order flow. You can get these moves at the high of the day or the low of the day, and they go literally to from the high of the day to the low of the day, or from the low of the day back up to the high of the day. You know, there's just a divergence, but no ratio, right? This one failed, right? That's why I like to use ratios with divergence. I just find it a bit more effective way to use a divergence, in my opinion. I'm looking for something to show you guys here. Just bear with me. Where am I here? Okay, so yeah. Fortunately, there's not much there in the crude. Let me go here to the E-minis. You know, this, what was that? That was 811, so the ratio and divergence. But again, it started to move and then just went sideways. Let me see here, yesterday, the day before rather, the day that we're selling off. You know, and I need to show you, I can't find any, but you can get the idea, hopefully. You know, here's price defense right here, right? You come down into the swing low, see a ratio bounds low in here, right? Obviously, you see the volume, the 269, obviously, you can see even earlier, 377, 325. So when you're seeing ratios, bullish or bearish, you know, bullish ratios coming in at swing lows or bearish coming in at swing highs, that's where you want to be paying attention, right? Because there's something in the market, right? And this here is telling you there's price defense. Obviously, there's nothing to stop you and say, I can't look at this previous bar or this previous bar. You see, oh yeah, you know, I see some big bids here, 325, 377, 269. I know there's support in that market there. Right? Sometimes people get so caught up in price that they're blinded by all the other information that they're looking at. You know, there's so much information on the chart in terms of volume, you know, what's being traded on the bid, what's being traded on the offer, that, you know, if you just open your eyes, you can see so much more. Okay, let me just see if I can't find a ratio and divergence here, then I'll end it. I said, you know, this market has just been too crazy lately. The equities markets, you know, markets like bonds and bunds and ultra bonds, you know, tend to move a bit more stable. Okay, here's a ratio and divergence at the low. Came in, made a new low before. You know, I just hadn't found its low. You know, on days, I find that on days where there's a lot of volatility and you're trying to buy a low. Now, I'm not trying to predict a low. I'm letting the order flow tell me that there's potential low here. On volatile days, you tend to get a little bit of a further push here, like you saw here, before you finally make that move back up. But this is a ratio and divergence. It's telling me there's some support coming in this market around this 35 area. You know, it just traded down a little, it poked lower before it turned around and started going back up. I mean, that's just, I'll say unfortunate, but that's just what happens sometimes in the markets, right? It's still searching for its low, so to speak, or its high, you know. But anyway, let's move along. Prominent points of control. Okay, a lot of people always wonder, what's this, why do some bars have these things in here, like this red or magenta, you know, or this light blue here, right? What does that mean? Well, that's a point of control that matters, okay? It's a point of control that is going to be acting as support or resistance, okay? So you can see here, right? Bearish, right? This is magenta. Now you can go in here into the chart, or sorry, into the indicator settings, and there's 3 levels of points of controls, prominent points of controls. It's in here. POC, prominent POC level 1, level 2, level 3. Now, in markets like NASDAQ that have a lot of price ranges in a bar, this is not going to be very useful, right? This is meant for, ideally for markets that trade decent amounts of volume, right? Because again, point of control is the level with the most volume in a bar. And, you know, you're going to want it to be, I don't know how to say, you know, a more compact area in your trading. Okay, so when you see them on like E-minis, you know, like on wide range bars, pay attention to them. So you can adjust up to 3 levels, okay, of POCs. Now, if I was using a 4 range chart, I would only use 2 levels of prominent points of control. But what it's telling you, if you see it like this is bearish, right? It's magenta color. Magenta is going to be bearish. Again, under the settings, the reason I developed this is I used to trade bonds a lot, almost exclusively, and I would notice that certain POCs, where they're appearing in the bar, are bullish or bearish. Now, I used to use different colors for each level, but I found I'm fine with keeping them POC level 1, 2, and 3 the same colors, right? Because they all have the same meaning. Okay, now you can adjust the look back period and the maximum distance in the bar from where the POC is going to appear. But these are my defaults that you get with the software, okay? So this is bearish, right? Market is moving up, but it's running into some resistance up here. Okay, let's see if I can find a bullish one here. It might be a little hard on this market because it's moving around. These bars got a lot of price level activity. This was during the day session. Again, every bar has a point of control, but not every bar has got a point of control that's necessarily going to be a prominent point of control in something that's going to act as support or resistance. Okay, there's nothing during the day session there. Let me go to bonds real quick here. So like here, right here, bullish prominent point of controls here and here. Okay, there was one bearish one here, but again, you're right at the low of the day. When I see prominent point of control on the edge of the bar at the low, that's even stronger. But again, you want to have some price activity in the bars. Okay, let me just change this to a 4-range chart really quick. Where am I? As opposed to a time-based chart, because really when I look at bonds, I'm looking at look at 4-range charts. Now again, if you're on a 4-range chart, you only got 5 price levels, so I'm not going to use the third prominent point of control, right? So I'm going to disable it because really I'm just looking for prominent point of controls that are going to appear in the top 2 or the bottom 2 levels. If I have it set to level 3 on a 4-range chart, there's only 5 price levels. It's going to give me a point of control in the middle as a prominent point of control, which I don't want, right? Because that's not a prominent point of control by definition. But it's reading sort of the levels in the bar. So you can see, right? Bullish, right? This is bearish, bullish, bearish, bullish, right? Down here, bullish one, right as you closed. But look at that. Bullish, bearish, bullish, bearish, bullish, bearish. This was a bullish one that failed. Here's a bearish one. Okay, here's a couple bullish ones, but then you ran into that bearish point of control. Bullish, right? Bearish, 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 right? Well, it's 7:30, but bearish anyway for what it's worth. Bearish, bearish, right up at the high of the day. You move up from the low to the high, you pull back about 50%, a prominent point of control, and you keep going higher. So that's the whole point of prominent point of controls. Now the next point of control is the slingshot point of control. We're almost done, guys. Thanks for bearing with me. It's actually a lot of material to cover. So you can see how robust the software is. Slingshot point of control is a setup. It's a POC setup that appears when the next bar pulls back versus the previous bar, then it resumes its initial move. Now, in case you're wondering, right, why some bars have, let me find, the red, all right, the red POC, that's the slingshot, that's bearish, or, the green is bullish, red is bearish. Now, if in the settings, okay, now, just really quick, if you have a slingshot POC and the bar also has a prominent POC, it's going to override the prominent POC because we find the slingshot is a stronger sign than the prominent POC. So that's why we have this color opacity set to 255. You can see red and green. So it's going to I don't say override, but color it in over any prominent point of control. It's because we find it almost an automatic trade in the sense of bearish slingshot, right? Okay, let the market confirm you. Boom, it sold off. Bullish slingshot. Okay, market confirms you. Boom. Again, it doesn't look like a much move, but the way this market has been moving these last few days, this is a 10-point move right here. Okay. And especially, you know, on when a market is starting to trend, seeing them in the direction of the trend is wonderful, right? Here, you know, you're seeing when you can combine them with other things, right? The bearish EVA and this bearish slingshot gives you a little bit more confidence in the trade, right? Bearish slingshot, bearish EVA, right? Market moves down. You know, here's a bullish one, bullish slingshot, but you know, it goes up and doesn't do much here. You got get another opportunity here. You get a better trade, right? As this market's moving up, you got a bearish one here, or sorry, bullish one. Market moves up. This one would have stopped you out. But you know, when you combine it with, let me just show you, right? Other things of other forms of order flow analysis. And again, I'm just going to be basic here. EVA and a slingshot, right? I'm just going to show you EVAs and a slingshot, EVA and a slingshot. You know, here's a couple of EVAs, but no slingshot. I've actually found that when you get two in a row, it's can be a quite powerful move. But this time is already 245 or sort of running into the cash close there. You know, let's take a look at what is this crude oil. Let's go back Friday day session. Where are we here? 7 o'clock yet? Again, I'm just looking for the EVAs. Here's one, but no follow through, right? Zero follow through. Here's one. You got the follow through in the next bar, right? Market made the move up. This one failed. Okay, fine. You know, not every single one's going to work out exactly beautifully. Here's a EVA and a slingshot. Now, granted, you're at the high of the day. You know, trade location wise, can the market go higher? Yeah, of course it can. But in this case, you know, it went up, then it ran into not a slingshot, but it's a prominent point of control in a bearish EVA. But you know, when you start combining, you know, sort of the different tools, you'll be amazed at, you know, some of the trade opportunities that you can take. Again, I'm just looking right now for bullish EVAs and the slingshot appearing in the same bar. But anyway, let's just move on. The last thing I'll talk about is POCs in a bar. Now, you know, one of the things that we've always had in our software was being able to put more than one POC in a bar. And basically what that means is, you know, bars can have more POCs, right? It doesn't always have to be your main POC. And what that means is there's the POC obviously is the level with the most volume, but there's a second POC means the second most volume. So for example, I'll just change it to, I don't know, Orchid. That would be POC level 2 would be the second most volume in the bar. POC level 3, gosh, I don't know what to color it. I'll just do blue and blue. Okay, so in the regular POC will just remain black. So POC level 2 is going to be Orchid. You know, it's kind of a strange color, but I'll change it to red. So a little easier. Well, I don't want to change it to red because that might interfere with your prominent points of or your slingshot rather. But just let it come up here. And again, you know, why would you want to use three POC levels in a bar? Again, you got to realize, right, what causes support and resistance is volume, right? Volume that's traded. So if you have three POCs in a bar that are sort of stacked on top of each other, now it doesn't have to be stacked in the sense of 1, 2, 3. It could be 1, 2, and then, you know, a skip to the fourth level in the sense of, you know, one POC, another POC, and then a price level that's not a POC, and then the next level is a POC. You know, that would, you know, that's still telling me the volume is mostly scrunched up at those levels. Now, with the addition of the value areas, you know, I've sort of moved away from looking at three price levels in a bar. because the value area is going to give me 70% of the value area of the volume in a bar. And in some cases, you know, I might be interested in looking at, you know, 50% of volume in a bar. Okay, so again, it depends on your trading style. So, you know, for example, you know, like this bar here, right? This is your main point of control, 38.36. The orchid is 38.36 and a half, and the blue is your third point of control. Okay, and you know, honestly, a lot of times you can get it spread out in a bar. Now, where's it going to be effective is when they're sort of scrunched together like this here, right? And we close below that. You know, here they're sort of scrunched together. We close above it, right? Here it's scrunched together, 3 price levels, and we close inside. But when we close away from it, right, I like to trade in that direction. That's how I've always used it. Or when I get two in the same, you know, the POC level 1 and POC level 2, then we break away and form a lower POC in the bar. You know, imagine it's like, you know, if you ever studied market profile, you understand a double distribution day, and you're sort of getting that in here, right? As the market direction is moving down, right? You got your first distribution, then the market moves down, you got your second distribution, okay? But again, you know, the problem sometimes with looking at multiple POCs is you get colorblind. But again, you know, when I see multiple POCs sort of lining up at the same levels, like here, you know, you got 1, 2, 3, 4, 5, 6, right? It's forming a value area. Now, our value area on the bar sort of replaces that in the sense that you're seeing a bigger picture. So I could see in here, right, on these bars, just in terms of value area, between here and here is your value, you know, for these bars. Look at this trading right in here. Then you break out and close above value. Now, in the past, I used to look at the points, the 3 points of controls, and I'd always sort of be, you know, scratching my head about a bar like this, where we sort of probe underneath, you know, this area, because when you're looking at the points of controls, it's really like this. It's a bit tighter. That's why I like to use now the value areas, because it sort of gives me a better understanding of really what's happening. Because I'd always get confused, like, oh, we're breaking out here. Then you sort of revert back in and trade inside, right? I would get stuck sometimes on trades like this, whereas the value area sort of expands it a bit, right? But again, you know, there are ways. I have strategies of using 3 points of controls, but I've sort of now I've kind of moved away a little bit from it in the sense that I've got the value areas. But just really quick, you know, on green candles, when you're seeing the 3 points of controls all around the same level at the bottom of the bar, that's bullish, like you see here. And in a red candle, if all 3 points of controls are appearing somewhere near the top of the bar, that's bearish. Let me see if I could find one here for you. It's got to be a red bar. Again, you know, points of controls, they don't always cooperate with you with sort of what you're looking for, but when you see it develop right in front of your eyes, you're going to notice it, like right here, right? These three is the red candle, the 3 points of control sort of scrunched together near the top of the bar. I've also got imbalance reversal. I've also got a bearish ratio telling me price defense. Then I put it together with what's happening on the points of controls. Yeah, okay, I know I got price defense. I'm not really looking for the market to go much higher here. And what happens? The market sells off, okay? So that's a lot of information I've given you. And so I've just explained all the different ways. And again, this is not all the different ways. There's many other different ways to analyze order flow. Now, I don't expect you to jump in and use them all at once, right? You got to trade in context of the market and the strategies that resonate with you. You know, maybe for some of you, you know, delta divergence doesn't make sense, or you're not interested in it, but value area and the expanded value area works for you, or multiple imbalances together with, you know, value area. You know, there's so much more, you know, and it's like, you know, you get a trading software, right? Like NinjaTrader right off the shelf, right? And imagine, right, you open it up and you look at the tools involved, right? Oh, they got all these things, all these little indicators, but they don't really tell you how to, you know, what do you use this for? What do you use? Well, most people know that. What do you use McClellan? What do you use MFI? What do you use momentum or the money flow indicator or the PPO or the pivots? They don't even tell you. They just throw it in there. Everything that's in the Orderflows Trader software is there for a reason, right? It's there to help you in your analysis of order flow, right? And why is because that's how I traded with it when I was still working at JP Morgan, right? At Cargill, etc. These are things that I was looking for even before there was a footprint chart, right? I was always looking for market sweeps in the market, right? Or even imbalances. I don't want to say I was looking for imbalances per se, but I was looking for these areas where big volume would just get eaten up. Now I wasn't looking at points of controls because that wasn't really a concept back then, and things like ratios and when I first discovered the footprint chart, I started seeing, in my mind, maybe my mind thought in numbers for some reason. I'm not, a mathematician by any stretch of the imagination, but I started seeing, what would happen in the volume, right? So that's how I developed the ratios. Exhaustion prints, I would notice that at ends of moves, what the volume would look like, right? Then as, I spend more time trading with the footprint, I would understand the points of control better, right? And why certain points of control matter while others just don't matter in the sense that, it doesn't necessarily mean anything in the analysis. So, all the tools in here are things that I use that other traders also use, right? So you don't just go out and start trading every order flow tool that appears, right? Every signal that appears, you got to put it in context of the market, right? And always trade in context of the market. That's what being a trader is putting what you're seeing in the market in context, right? It's not just about, oh, there's a red arrow, I got to sell, or oh, there's a green arrow, I got to buy. No, okay, the order flow is turning bullish. What should I be thinking of doing, right? And is what I'm starting to see in the order flow is that conducive to my expectations of the market, right? So hopefully by now you can see how much better and easier it becomes to trade order flow, right? When the software does the analysis for you. So how much do you think about it, right? How much easier do you think your trading will become when you add in order flow analysis, when you understand what's happening in the markets, right? Honestly, we tend to make things more complicated than they really need to be, right? I don't say keep it simple, KISS, but, don't overcomplicate things, and especially don't overcomplicate trading. And honestly, what attracted to me to order flow was being able to see who's in control of the market, being able to be in sync with the market, to understand why a market stops and reverses, basically. I always wondered why, when I was first starting out in the industry, why does a market stop at a certain level and reverse? There must be some meaning behind it, and it comes down to the actual trading, right? And honestly, what I showed you can be done on any footprint chart if you know what to look for. But honestly, I think why should you settle for less, right? You get a software that's going to do it for you and process the information that you see in the time and sales. You don't need to have time and sales up. I don't have time and sales up on my screen. I see people with time and sales. For what? It's just like a never-ending constant stream of prices. And for what? I mean, they're not processing that information. They're just trying to look cool. Honestly, staring at a time and sales, and I've done it. I've stared at time and sales for 25 years working in the industry. I always had time and sales up there. I don't, because you just sort of had to have it up there. People say, well, this is the default, right? The people from the CME when they're giving us Globex, and even the Frenchies when they came up with GL, right? The Windows-based version of Globex, they say, oh, here's time and sales. You got to have it up. So, everyone, okay, I got to have it up, but for what, right? You have things on your screen that you're going to help you understand what's happening in the market. So hopefully, I mean, it's past 2 hours actually, you'll find that it's been time well spent. And I covered a lot of stuff. Honestly, I can't cover every single thing. I do have weekly 60-minute training sessions for users of the software. But if you're interested in the software, again, I've explained it, what it is and what it does. It's really like having a computer plugged into my brain. And I'm not trying to brag or anything, but really what I look for in the market, right? And what I've always looked for in the market, Okay, so that's what my software does. It does analysis for you, so it's going to make your trading a bit easier, right? But again, having software is one thing. You have to know how to use it, right? You got to know what to look for in the order flow. So I don't just give you software. It's going to go figure it out on your own. Good luck. Um, I provide a lot of education, right? I give you access to my trading course. There's 20 lessons in there. It's about 15 hours of video instruction, right? I give you access to the Orderflows Inner Circle video series. There's another bunch of videos in there, on all different ways to analyze the order flow. Now, I don't expect you to just go watch a bunch of videos for the rest of your life. You also want to be watching the markets live, and putting what you're learning into use, right? If you were to all add that up together, honestly, it's quite expensive. It's $1,600. Honestly, I don't think it's expensive. I mean, something that can transform your life is, can you put a price on it? But again, it's one thing to learn from books and videos, but you really want to have, constant interaction, right? You want to have some weekly interaction with me that, hey, this is what, we're looking at now in the markets. This is what I saw today. So I have a weekly group training session, right? That's live every Tuesday night, 7 p.m. Central Time. They're all recorded. There's actually 111 now. This is an old picture. It's like 111 sessions recorded. Again, I don't expect you to watch them all, but if you miss one, you could catch it. So, again, and other people want to charge you extra for that. It boggles my mind. I see software people selling software for whatever price, $300 a month, right? Then they want to charge you forever. And then well, we'll train you how to read the order flow for another $1,000. What? That's a ripoff, in my mind. You get all of this, right? Software training, live training. It's just a one-time payment, $749. I hate these softwares that charge you forever. And it's like even, they're charging you $200-300 a month, to your card, and you even cancel the card and you're still getting charged. It's like, I don't know what probably when you die, you'll still be getting charged. My software is just cheap. I say cheap, it's inexpensive, it's affordable, right? $749. I get people saying, oh, you should charge more. I'm like, yeah, I could, but honestly, I'd rather reach out to more people. Because people tell me, they're struggling, in their trading, they want to get better. And I understand that, because I know what it was like when I first started in the industry. That's why I got started in this industry, because I wanted to be a better trader. That's why I started on the floor as a runner, so that I could learn more about trading, right? And I took to it like a fish to water, fortunately. And I started meeting the right people, and my career took off. And I applied what I was learning, right? That's what you got to do, is you got to apply what you learn. Again, other people have been saying, great things. Just, there are people that say negative things. There are people out there. You go on the internet, you type my name in, people, oh, well, he's a scammer or whatever. Who are these people, right? Some of these are my competitors, honestly. There's somebody, oh, I get people, I release things, either indicators or a course, and there's people that buy it, and then they refund it. Okay, like a course, they buy it, then 2 days later, they refund it. Okay, and they do that over and over, right? I got one guy bought 5 of my indicators, and then within 2 days, 3 days, he would, do a chargeback. I mean, okay, if it's really so bad, why you keep buying it? I've had to block people. Then people, they even get mean. Honestly, some of these emails. But anybody that's asked for a refund has gotten it. Now there's times where PayPal has had to do an investigation, because sometimes people are serial refunders. They think that's me, but it's actually on PayPal's part. PayPal also does their due diligence. So when people, buy things over and over, and then they ask for a refund, and then PayPal finally opens an investigation into them, they get bent out of shape and they write nasty things. Okay, fine. But I get a lot of messages from people saying, your trading has, your courses or, your software has really made a difference. And that's why I do it, right? The tire kickers, these people, that's just a small percentage, really. And it does get over initially, it gets under my skin for a minute or two, But you know what? These people, they'll never be successful, right? Because they don't want to put in the time. I could tell if someone buys the software, then 2 days later, I can't make it to work. I don't understand it. Well, you haven't even spent time to try to learn it. I try to keep it as simple as possible, right? I showed you how simple it is to load up a chart, right? And if people can't even take the time to try to, spend some effort to watch a video on how to set it up or something, yeah, you can't please everybody. But people that do get the software and use it and put in the effort are like converts. I don't say it's a cult, but they find that the results are amazing, right? They say, I don't know how I ever, I don't. They're like, why did I ever trade without understanding order flow? So all you gotta do is go to orderflows.com/off3, scroll down, go to here, press that button. It's going to take you to PayPal. PayPal processes it. Again, it's just $7.49. It's a one-time payment. You're not going to get charged in the future for an upgrade. Like I said, we're on our third upgrade. That's why it's called Off 3, because this is our well, the first version is just Off, then the second upgrade, the first upgrade rather, then this is the second, but it's the third version of Off, and you get the upgrades for free. I didn't charge anybody when we moved from NinjaTrader 7 to NinjaTrader 8. You got upgraded for free. Right? And if you're on the old version of Off 2, send me an email, right? I've pretty much got everybody converted already over to Off 3, but there are some people that are still on Off using the previous version. We don't charge you for those upgrades. When we make big changes in the software and we release it again, we don't charge you for that. That's for the Orderflows Trader software. Now I have other indicators which are separate, and that just reads one part of the order flow. Now, again, you got to get off your ass and do something, right? I've been emailing people. Email me for the last several years, asking questions about the software, etc. And I'm just like, I answer them, but at the same time, it's like, when are you gonna get off the pot, so to speak, and take some action, right? It's better to take imperfect action than no action, right? Because you could do nothing for the next year, 2 years, and stay where you are, right? But that's not where you want to be. Maybe you could try to figure it out on your own, right? But yeah, you're going forward, but instead of understanding where things go, it's not going to be as good, right? What you want to do is you want to put the ball in the back of the net, right? You want to score, and that's where I come in, right? Because you're going to learn how to read the order flow better, okay? But again, you got to take action, right? You got to understand what motivates you and why you want to do it, right? Say, oh, I'm unhappy with my job. I hate my boss. Whatever, okay? What are you going to do to improve yourself, right? I had to make a big shift in my career to get started on the trading floor, right? I went from making, when I was 20 years old, I was making $35,000 a year in a job. I said, you know what, but I don't want to do this the rest of my life. I want to get into trading, and that's why I left my when you're 20 years old making 35,000, that's, you think you're king. But I realized, what's my max potential, right? That's why I left that job when I was at that age and got started on the floor. We're running for Dean Witter at $5.25 an hour, which at that time was considered a lot. Most of the places paid you minimum wage, actually like $4, $3.75. But anyway, I have to make that choice, because what motivated me was a better life, right? Now, what motivates me is my family, right? Being able to go on vacation whenever we want, right? To do nothing. I don't want to work today. Okay, fine. I just want to veg out and binge Netflix, some shows or something. Okay, I can do that, right? Trading gives me that freedom. You got to find out what motivates you, what you want to do with your life. Now I got a special bonus. Again, you get the software. It says for Investors Expo, but this is you'll also get it. You get the Orderflow Playbook, right? Which is my course that I did a year ago. I think it's a fantastic course. I think it's one of my underrated courses. But I'm gonna give you that for free. Normally I sell it for $297. If you go to orderflows.com/playbook.html, you can see it's for sale there for $297, and people still buy it separately. But again, I want you guys to get going, right? Do something with your life, right? Get started. So again, what you'll get is the Orderflows Trader software, right? the upgrades that come with the Orderflows Trader software will also be, it's free. I don't want to put a value on that because it's I give it to you. The trading course, the Inner Circle video series, the playbook, right? Plus live weekly group training. We've been doing it for over 2 years, right? We were the first people to really do it. Now we're starting to see other software vendors doing it as well, right? Because, honestly, you get software, you want to be able to understand it, right? And it's not just a point of, playing email tag. You have the opportunity every week to come in there, ask your questions, say you've been trying to reach me, you can't reach me for whatever reason. Maybe your email goes to my spam. Okay, fine. At least I'm there every week, right? That you could say, hey, Mike, you missed my email, or you just put your message in there. Say, Mike, I need a new license token or something. I had a BIOS upgrade or something, and NinjaTrader gave me a new machine ID. That's fine. That's why I do it. Okay. And again, it's just a one-time payment. This price is actually going up a bit later this month, but it's still, you get involved now for $7.49. Again, I think that's a terrific deal. Honestly. Again, I see people charging $1,000, $999 for trading instruction. For what, right? And then they just teach you stuff that they learn from watching other people trade or their videos. At least here you get it from me, and you get live sessions as well. So again, you gotta get started. Go to orderflows.com/off3.